Good morning, folks. I hope everyone out there is having a good trading week so far. We're going to be getting this edition of Back to the Futures with me, Markets and Mayhem, going here and now. The folks at Bookmap would love for you to join us on the Discord they've got there. They've got a lot of cool stuff going on. And I think it's a great spot to learn more about Bookmap. They have education about how it works, about how different traders use Bookmap for their process. So I think it would be pretty helpful for a number of different reasons. So definitely come by and check it out. You can use the QR code on screen to do that. Or you can visit discord.com/invite/bookmap. A little bit about me. I've been trading for a while now. It's about 20 years. I know that dates me a little bit, but it's been an incredible journey. I've had a lot of fun, and I love sharing my experience with you all. So feel free to pop in the chat, ask any questions you have. You can also request charts if you'd like to look at different symbols. We're going to be doing a bunch of chart requests for anyone that wants to look at stocks. Just make sure they're liquid enough. If it's not a very liquid stock, you're probably not going to see a lot that adds value. So that would be like the main point. So, you know, if it's one of the bigger Mag 7 stocks, or even one of the top 50 stocks in S&P or NASDAQ, that should be big enough. And why do I watch order flow? Why is this an important part of my trading process? Well, the biggest thing that I think is important is looking for the differentials in the order flow. You can see that in the way the Bookmap tracks the volume bubbles in stocks, futures, crypto, but also in the delta volume profile. So you can see that in the way that I have volume profiles set up, where you can see the difference between buyers and sellers, where the aggressors are at different price levels. So the volume bubbles and the volume bars, if you have them set to delta on the bottom, they're showing you that difference between buyers and sellers is a matter of time. And then the session volume profile is showing you that difference between buyers and sellers as a matter of price. Right? So both of those can be pretty valuable. The other thing that's important is looking for large passive order flow. And Bookmap allows you to do that when you're looking at futures using Rhythmic or Bookmap data. You can see the icebergs that may act as turning points if they're large enough in flow. So those can be pretty interesting to be able to observe, especially if you see other confluent events happening around the same time. Especially things like exhaustive trading action and then an iceberg-driven reversal. So you might see a huge stop-out event. Let's say market goes down really big on a Trump headline, right? You see a bunch of stops get run, but then you start to see these larger icebergs coming in, buying and buying and buying. That can mark a reversal point, and that's one of those areas where order flow can help to define where those probabilities are. So why do I use Bookmap to watch order flow? Biggest reason is that it brings a lot of this together on a single screen, which makes my job a lot easier. I do have a lot of screens in front of me, but believe it or not, I don't want to dedicate them all to charts. I want to have discrete charting for specific instruments and time frames, and I might tie that up to 1 or 2, maybe 3 screens. The rest of it is about research, it's about execution, it's about being able to monitor other components of the market. So for me, Bookmap brings a lot together on a single screen. It also has that tabbed interface so I can go between instruments and different views of even the same instruments. If I want to set up filtered views, for example, pretty effortlessly. Now we do have some pretty cool exclusive deals for you all. I've been chopping at the bit to get access to Bookmap. Or if you just want to see if you want it after this stream, after you've learned a little bit more about how it works, you can visit traderaid.com/bookmap. That's traderaid.com/bookmap. to learn more and get up to 40% off using the special offers at the bottom of that same page. So again, visit TraderAid.com/bookmap. You can learn more about what their offerings are and get 40% off scrolling to the bottom of the page under the special offers. And if you want to check out TraderAid, we have a pretty good discount going on right now, actually. You can use, it's not on the screen, I forgot to add it to the slide deck today, but you can use the code year3 for 33% off. That's year3 for 33% off. So those are all the deals. We're going to dive right into Bookmap now. So today we're going to focus a little bit more on some of the major stocks that are out there to give a better sense as to what's moving the market. It often does come down to some of these bigger stocks. And again, I also welcome you all to request charts in the chat. If there's something you want to see, let me know. Good morning, Leroy. How's it going out there? ASML has been requested, so I'm going to add that up here in just a moment. That is an interesting one. That's one of our trades, one of our long trades at TraderAid, so cool mentioning that one. I'm just interacting with some folks on Twitter. We also have requests for Apple and Tesla. So let me pop ASML on while we're waiting for the market to open here in just about under 12 minutes. And I'll be doing a little bit more in-depth analysis on these once the market is open and we've got a little bit more data to work with. But we'll go through some of these pre-market, starting with Apple, and I've added ASML to the rotation, so we're going to get to that one in just a moment as well. Good morning, folks. Thanks for tuning in. Got some more folks saying good morning in the Twitter chat. And feel free to speak up. Remember, this is a session just as much for everyone else out there. So y'all are always welcome to ask questions, request different symbols to look at, ask more about how Bookmap works, how I trade with it, really anything you'd like. Let's have some fun this morning. It's Taco Tuesday. We got Jay Powell coming up soon at 10 a.m. That should be fun as well. So let's take a look at Apple. Let's pull it back just a little bit. You can see the overnight session, pretty sleepy, but getting a nice pop right now on AAPL pre-market. And we could see the stock's up about 1% pre-market here. Amazon, a little bit of the opposite look, getting just a little bit more selling pressure pre-market versus Apple, which has bid up over 1%. Amazon's down about 1%. And you can see there's just a little bit of interest here growing below that current bid. So that might act just a little bit magnetic. Of course, we'll see how that liquidity changes as the market opens. You're going to see these books become a little bit more hot, meaning there's going to be a little bit more liquidity added in after the market bell on a lot of these stocks. Then we have ASML. ASML looks a little bit choppy here. Let's see what the it's up just about 0.4% pre-market, and just a little bit of a thinner order book if you compare ASML, because it's like a, I believe it's an ADR here. It is a Netherlands company, so it doesn't have quite as big of an order book. You can see that here. It's just got about 53,000 on depth versus something like Amazon, which has, you know, around 500,000 on depth. So it is an order of magnitude in difference in terms of just how much participation there is. We'll see how that changes after the opening bell. Taco's favorite dance is the salsa. Awesome. All right. Google looking a little soft this morning. Down 1%, a lot like its peer Amazon, and it looks like that selling pressure just kind of been building since the pre-market session started. A little bit more pressure in the last, let's say, 10 minutes or so on Google, or Alphabet, as they prefer to be called, but no one wants to call them that. No one knows them by that name. Let's move on to Meta. Meta really defying gravity. It's been impressive how much this thing has run. Last week, its pattern looked a little bit more like you know, a rising wedge that could break down, or at least a channel that was towards the top of that channel. But we can see, and I'll just bring this on screen really quick, just a quick and dirty chart from FinViz. You could see that pop above that channel, and it's just been building on that after earnings. So that is a pretty bullish look. I do still think it's a bit extended here, but obviously markets are going to market. So Meta this morning down just about 0.5% ahead of the market, making some new lows just in the last 10 minutes or so. And Microsoft down about 0.5% pre-market here as well. So just a little bit of a feel of pressure in tech outside of Apple, which sometimes Apple ends up being the safe haven inside of tech for one reason or another. And it seems like I got a bit of that feel this morning, where Apple's up and a lot of these other guys are bid down. I'll look for some catalysts in just a moment. I'm pulling up my Benzinga feed. Netflix, which isn't really part of the Mag 7, but it's still worth watching. But here's something interesting. Look at the book depth on Netflix. It reminds you of ASML a bit because it's similarly light. And again, we'll see how that may change after the market opens. Leroy, I'm not sure if you're asking, are you talking about showing the chat in the stream? Let me know what you're asking, buddy. I'm just trying to make sure I do a good job for the viewers out there and give them what they want. So, you know, if that's what you want, I can look at that in the future, having the chat somewhere here as well. There's like 3 or 4 different chats I'd have to find a way to aggregate in order to do that, but it could be cool to do. Moving on to NVIDIA, everyone's favorite stock to love, to hate, to write conspiracy theories about. It's amazing how much energy there is on this stock on both sides of the ledger. I kind of come in a little bit more neutral. I think that NVIDIA has some serious risks ahead of it. I don't think it's a giant scam. I don't think it's the next Enron. I don't think any of that stuff has any merit. But I do think that we're seeing significant optimization of the software stack that powers AI. That could reduce demand a bit as time goes on. We're also seeing specialized chips for some of the most intensive computational operations we do for AI, like training, and Amazon making custom silicon like Trainium. It's another risk. And then we see more countries talking about cracking down on NVIDIA's monopoly, and they have 95% of market share in data centers. So I'm more neutral, aware of the risks on NVIDIA, thinking that there's been some plateauing in the technology, which I think is important to realize with quantum tunneling and with Blackwell being more incremental than revolutionary in terms of the gains it's providing. So just some things to think about. Again, neutral view, not really strongly bullish or bearish of NVIDIA, just aware that some of those left tails are fattening. But today's session on NVIDIA looks like there is a little bit of selling pressure ahead of the market. And NVIDIA, like its peers, like Microsoft and Amazon and others, it's down just about 1%. They're all kind of having a down 1% party this morning. So let's just really quickly look at the implied cash open for the NASDAQ. And NASDAQ 100 implied open down about 0.6%. Oh, okay, Leroy, that's a very, I like that. So what Leroy says is, he was asking if he could look at the chart of each of these stocks before zooming into Bookmap. And you know what? That actually makes a ton of sense. So let me see what I can do about that. Bear with me just a moment here. Let me see if I can bring that up in TrendSpider. So just bear with me here. We got a little bit of time before the market opens anyway. While I'm doing this, if y'all have any other symbols you want me to add to the rotation of things we're going to be checking in this morning, let me know. All right, so I've got that set up. So what we'll do here is we'll start on Palantir, and then on the next run, we'll use the big charts, and then we'll zoom in for everything. So what I'm going to do is I'm going to set this up as like a full screen app, and we can just pivot between them. So here's Palantir. My God. Look at this chart. This is just insane. I am long this stock. I have been with a cost basis of about $7, so it has been a sizable winner, shall we say. So seeing this chart's kind of interesting, putting things in perspective. I do think it's run a bit ahead of itself, and it would be healthy for it to consolidate, cool down, maybe grow to that valuation. Got a lot of gaps in this chart. Gap theory would suggest that at some point some of these gaps get filled, right? So we'll see. We'll be watching very closely. And we have this one in the Bookmap rotation today as well. So that's Palantir. Let's pull it up in Bookmap. And yeah, Leroy, thanks for that idea. I think that's a really cool idea. So I'm gonna be doing that moving forward for these stocks and some of these other charts in Bookmap. So Palantir this morning trading 115.72. So pre-market, just 10 minutes ahead of the open, down about 0.75% on Palantir. Yesterday it closed up 5.23%. This thing just doesn't stop. And it's interesting because I know there's a lot of folks saying, oh, well, there's this enormous, euphoria around this stock. And, look, with the chart and what it showed us just now, it's hard to disagree with that at the surface level, right? But here's what kind of is interesting about it to me. And I'm just quickly pulling up this market chameleon chart. Okay, this is showing the skew between puts and calls. What it shows you right now is it's actually slightly bearish. It's pretty much normalized, slightly bearish skew. So what that suggests is there isn't this enormous amount of speculative fervor coming in via options into Palantir, right? So yeah, retail are buying Palantir, other people are buying Palantir. In fact, a lot of institutions are buying Palantir. That's something that doesn't get talked about really as much as it probably should. But we're not seeing those traditional signs of a stock that's seeing euphoria in the options for it. So that's one reason I think that it hasn't had this sort of like alarming, dramatic pullback, whatever you want to call it, because we have seen continuing signs of encouraging growth. And while, yes, the valuation is arguably stretched, it still looks modest in comparison to a lot of these quantum companies that don't make any money and may never make any money. So we're kind of, balancing what we see in the options positioning, which is, again, arguably not too extended, with the chart itself, which was, this is a stock that was trading like in the 5s in 2022. So it's been an incredible run for Palantir. But, I would love to see it settle a bit. There's just no signs of it being too overbought in data-driven metrics, not things like RSI, which, let's be completely honest, if we want to have a real frank discussion about technical analysis, I'm going to say something that is going to frustrate some people, but eventually you'll find it's true. If you're in an uptrend and you hit the upper Bollinger Band, it doesn't mean anything. It's not implicit resistance. Now, I know that some folks are going to find that to be a bit annoying, but the reality is that the upper Bollinger Band matters more in a downtrend for an overbought or a, sell into level. Just like RSI being above 70 during an uptrend doesn't give you a sense of overbought. It's not what you think it is. That matters a lot more in a downtrend. If you get a pop above even 50 or 60, that can be sellable on RSI. But these things that we've conventionally been led to believe, like, oh, the upper Bollinger Band resistance, the lower Bollinger Band support, that only matters in a consolidation, really. Like if you're going sideways and you have this sort of predictable chop pattern, yeah, Bollingers are great for that. But once you see that band, that Bollinger Band expand, so you go from a squeeze period to a breakout where price volatility is becoming bigger and bigger, then the top band, if you're going up, is more of a compass than it is a resistance level. So just something to think about. I know we trade in all different ways, but these indicators can be really helpful with some nuance and getting away from maybe some of the more conventional thinking. Anyway, that was quite a departure from the core subject matter. Let's get back into it here. And let me pull up Tesla. So Tesla coming back to earth. And this is a company where I still think there's a fair amount of risk here. I don't see any reason why we can't get back to the high 200s, like 275, 280, even maybe filling this gap lower. But at the very least, kind of getting to this top area wouldn't be too surprising. That's closer to like 260. And the reason is that this is a company that's actually in quite serious trouble if you look at their fundamentals. So Tesla has not had a particularly good time with their earnings. The last earnings report they gave, we showed slowing year-over-year sales, reduction in earnings from vehicle sales. Of course, if your sales are slowing, you're probably not going to be doing too good on earnings. But what made the earnings look a lot better than they really were the sale of carbon credits and appreciation on Bitcoin holdings. Not really what you want to be focusing on too much if you're saying we're a growing auto AI robotics company. There's a lot of fluffy nonsense that management said on the call, which really doesn't reconcile with reality. So I feel like this is a company that's actually seeing a decline. It's not a growth company anymore. They're not growing anymore. They're actually shrinking, and their core product business is cars. They haven't really been able to monetize self-driving or AI or robotics in any meaningful way. And so I would look at this one as, even though it's come down quite a bit and people are probably chomping at the bit saying, boy, I'd love to buy some of this. Be careful out there, folks. I don't know that this is over. I do think there's still risk. I know Tesla tends to trade inverse to its fundamentals, but I do still think there's some risk with this one. So let's go into Bookmap, take a look at Tesla this morning. And Palantir, by the way, big level at 117, about 39,000 shares on offer there, and big level at 114, about 39,000 shares on bid. Tesla this morning continuing its downward trend, down 1.19%. And we see sellers dragging that point of control a bit lower as well. So overall, a lot of the tech looking pretty soft this morning outside of Apple. Let's go back to Apple here, but let's bring up the bigger chart. We've got just about 4 minutes before market open here. So Apple's chart, yeah, it's not looking too promising overall, right? You've got this big move up. A lot of that was happening while other parts of the market were under a bit more pressure. Apple kind of has been this sort of inverse. It's almost been like trading as if it was a safe haven, but nevertheless, you had a drawdown back to those lows from early November, a bit of a pop, and now we're just selling that back down overall. So yeah, Apple is set to open a bit higher, but the technicals on this stock look pretty poor. And if we go out to a weekly view, it does look like a chart that's sort of consolidating here. If we start to break the bottom of that consolidation range, I think we get back to the high 100s. You've got this whole very well-defined top area that could act as support, say between 195 to 190. So basically, if we're not able to hold 220, this thing could break down pretty nicely on Apple. And Sam in the chat, she's saying that Baba is partnering with Apple for AI. Baba up about 2.84% today. And I will say one thing about Baba that I've been really impressed with is their Quen model. So if we're talking about large language models, chatbots, you know, all the rage right now, these transformer models have a lot of different competitors. And one of the ones that I felt was actually the most capable, well before DeepSeek, was Quen, Qwen. And Quen is made by Alibaba. So I'm not too surprised to see Apple looking at that and saying, you know what, this could do a few things for us. One, we're seeing tension with China, which is one of our important markets. It's also an important area for Apple to produce their products. Maybe in Tim Cook's mind as he's cooking, right? Trying to figure out how to save Apple from all these forces that are kind of undermining their dominance. One thing that they can do is partner with Alibaba and maybe appease Xi a little bit in China. Maybe ease those tensions, because China was looking at cracking down on Apple pretty directly. So this could be a bargain that's been struck. But the other part of it is it makes sense. These AI models from Alibaba are actually quite good. And they are open source. So if Apple does any sort of on-device stuff with these mini models, or they host them in the Apple cloud, that alleviates some of the concern that data is going over to China. So zooming back in on Apple stock this morning, seeing a bit of a round trip there. So we had that catalyst from Alibaba, which is still helping Alibaba shares. They're up almost 3%, but Apple shares now up just 1/3% here. Opening bell in just about 30 seconds here. And folks, remember the highlight of today, the big event. It's got everyone's attention, that everyone's going to be watching and probably have a big tub of popcorn for, will be Fed Chair Powell's testimony at 10 a.m. Eastern. I know we're all eagerly anticipating it. It's the event of our lifetimes. And, you know, that's in front of the Senate today, and tomorrow in front of the House. You get the best of both worlds. It's going to be amazing. I'm sure you can tell there's maximum sarcasm coming through, but if not, wanted to say so anyway. So Apple now opening up, market opening up here, seeing just a little bit of pressure off the open. NASDAQ down just about 0.7% here. S&P futures down about 1/3%. Now seeing just a little bit of a pop in Apple. We're going to go around and look at some of these other stocks, but if y'all have any chart requests, any stocks that you'd like to look at, let me know. ETFs as well. Going to do more of a stock and ETF theme day today. I know I focus a lot on futures, but I figured we'd mix it up today. I know a lot of folks out there also love to look at stocks and ETFs as well, don't necessarily trade futures, and that's fine.
To the room dripping in gold.
Fannie Mae from Rando. All right, that's an exciting one. So first, let's pull that up in TrendSpider. Oh boy. Bill Ackman's pretty happy with this, I'm sure. This is one of his picks for that Robinhood stock picking charity, which has nothing to do with Vlad Tenev's company and something that I think pre-existed before it even was around. Nevertheless, Fannie Mae looks a lot. It looks like a lot like that Palantir chart, this sort of straight up rocket ship. A lot of this has to do with the idea that maybe this will be allowed to spin off, privatized by this administration. So that's helping to catalyze some of this movement. This has been easily a 6 to 7 bagger depending on where you were getting in, but definitely a huge move here in FNMA. And you know, we can see we're in a part of the volume profile where there hasn't been a lot of transacting. So this move really from $3 to $7 and in excess of that is on kind of poor structure. So, you know, if you don't have a continuation of buying, continuation of catalyst, this can retrace pretty quickly. There's a lack of transacting that's happened here. So you can expect a little bit more volatility overall. So let's zoom in and pull this up into DX feed. Ooh, we're not getting a symbol on that. That's interesting. Hold on. I think it's because of where it's listed that it's not coming up. Yeah, it's OTC. So I'm not able to pull up the data for that one. We've got a request for Broadcom. So we're going to pop onto Broadcom. Just got... give me one moment. I've just got to check on something real quick. Give me one moment. I'm just taking care of something in the background here, folks. All right, so let's take a look at ASML. I'm sorry, we're looking at Broadcom. A lot of stocks that are popular that are semiconductor proximal that start with the letter A. All right. So this one's had a pretty powerful move. I do think that there's a little bit of an overreaction to the DeepSeek news on this stock in particular. It wasn't really impacted the same way an NVIDIA would be. So I do think that there is, reason to buy that dip. We did see that dip kind of aggressively bought and pushed into, so we'll just zoom this in a little bit. You can see that gap down. We never quite filled that gap lower. Now, I won't say that I'm a religious subscriber to gap theory. I just think that it does have some validity. Often gaps are filled, but not always gaps are filled. So that's something to kind of keep in the back of our mind, that, that gap could come back. It could be filled later. But overall, I think the bigger risk to a lot of this is just the presumption of really aggressive spend on data center expansion. I know that the mega caps have come out, sort of reinforced that, but I would still say that this is going to probably end up being a race that's just as much about scale of how much hardware you have in the AI space, how much capacity and compute you have, as also efficiency. How efficient are you using that hardware? Are you delivering the sort of results that you suspect you should be able to deliver with that scale of hardware? Are you able to gain orders of magnitude more efficiency with things like what DeepSeek was able to reveal, right? Which was that if you change how you train and how you do inference, if you take some clever tricks, and I can be more specific. If you're using 32-bit precision on training, you're using a lot more resources than if you're using 8-bit precision. And if you can get similar results from 8-bit that you can from 32-bit, which is one of the things DeepSeek did, then you can certainly gain some more value going to 8-bit because you're using orders of magnitude less compute. So, long story short, I do think that the demand for some of these semiconductors could still come down from here, simply because I think the aggregates, the assumptions about where we're going to go with all of this data center expansion this year has probably run a little bit ahead of reality. That's just my thought. So this stock chart to me overall looks like it's really trying to consolidate, trying to get back up into this area of the volume profile. You can see there's a lot of willingness and eagerness to transact up here. It's different than Fannie Mae. Fannie Mae didn't really build a lot of acceptance and transacting at its highs. Avgo did. So that's good as long as we don't start to slip too much lower. You can see that it gets a lot more volatile. This 190 area, where you can see no one's wanted to transact here in the last, say what, 4 months? That's a pretty key area. If we do get back down there, you want to see a big bid back up to the 230s. Otherwise, you really do risk getting kind of magnetically pulled back into this other area of volume profile where there's been, again, a lot of transacting, right? You can see where people want to transact and you can see where they don't. So that makes that 190 area a bit of a decision zone. So that's one of the things that I would look at. I don't love the fact that this is kind of a lower highs, lower lows type of chart. Like here's the highest high. Then, you make a lower high, a lower low, presumably a lower high here. If that ends up being the case and we start to pull lower, momentum does favor a test of that 190 area. So for now, cautious on Broadcom. If you were lucky enough to buy that DeepSeek dip, then I think it's a decent area to take some profits off. But I would be watching momentum here because it looks like it's stalling out. The last several trading days, we really can't get above this really large area of supply. So there's still folks that are trapped up here. That's the other thing to think about. With all this excitement that you can see in these highs in the chart, all these wicks, there's still folks that were buying up there thinking, oh, this is where I'm going to start my investment in Broadcom. And obviously starting your investment in Broadcom at like 235 you're going to get a little nervous when you have these kinds of runs lower. So they become supply. They become more motivated sellers the further away from their cost basis price goes. So that's Broadcom on the big view. Now let's zoom in to the intraday view. I'm just going to pull it over here to sort of keep things somewhat alphabetized. And we'll give it just a moment to pull. We're going to backfill, say, 3 hours of data on this. All right, we have a request for S&P 500. We'll look at that in just a moment. I'm going to give this chart just a moment to also, let's see, did it do? Yep, it's done its backfill. So we've got Broadcom overnight, bit of selling pressure, you know, into the pre-market. And then we can see there's a pretty aggressive bid coming in. A lot of absorption from both buyers and sellers. We can see that on the chart as well. But overall, that dip right off the open being aggressively bought. So there are still willing and able dip buyers in this stock. And there's a lot of interest in higher prices today. You can see there's a delta of 392,000 where offers are in excess of bids. So on the one hand, you could consider that supply, but on the other hand, you could say, but that also does tell you there is interest in higher prices from here. Not terribly higher, right? But really looking all the way up to like the 240s. So we're going to pull up S&P futures here. Give me a moment. We're going to pull that up on DX feed. We'll backfill about 6 hours of data. And keep the requests coming, folks. If there's anything you'd like to look at. All right, let's go over to that S&P futures chart here. And I'm just going to clean this up, so give me a moment. All right, so we have the S&P chart on screen here, but as promised, I am going to dive in first via TrendSpider, and then we're going to zoom in using Bookmap here. So we're going to look at SPX on TrendSpider just because it tends to be a little bit more complete the way they fill their data. If they let me. Nope, I don't have that set up quite yet. So we'll look at SPY for now. So the big takeaway, and you could show this with any of these charts, you could show it with SPY, S&P futures, S&P cash. The big takeaway is we're sort of consolidating. Momentum continues to favor the buyers, but it is waning. I don't love the pattern here. It does kind of look like lower highs and lower lows, especially if we make it yet another subsequent lower low. Then it's going to be one of those sort of fool me thrice scenarios for the buyers that are continuing to try to fight this. But at the very same time, I don't see a lot of reason to be overtly negative of the market where we are. We're seeing a bit of a rotation. We're seeing a rotation out of some of the mega caps and into a broader subset of S&P stocks and NASDAQ stocks. So if you look at QQQE, if you look at RSP, these are ETFs that are equal weight rather than being market cap weight. And we're starting to see them come back to life a bit. So I do think that's something to keep an eye on. Do we continue to see earnings improving for the inglorious 493, the less loved parts of the S&P 500? And if we do, and we continue to see that rotation away from mega caps and into some of these other stocks, then RSP ends up being a pretty decent way to gain long exposure to the S&P, just like QQQE ends up being a pretty good way to gain long exposure to the NASDAQ, because you're getting equal exposure to every component rather than weighting them by their market cap. So overall, S&P chart looks a little bit challenged here, but we're not in a territory where I could say the bears have an upper hand. We're more in a consolidation, still overall in an uptrend. We can see S&P is still above the major moving averages, still above the 20-day, it's still above the 50-day. Of course, it's above the 100 and 200, but it's just sort of consolidating and waning in terms of momentum. So that's the backdrop we have going into this view of S&P this morning. Overnight, pretty much a flat tape, but we are starting to see buyers coming back in just a little bit more aggressively now. So let's just pull this up from the market open, and you can see right off the open some pretty chunky buying flows into the S&P, now just starting to level out a bit. So let me just take a look. Just want to take a look at one area real quick. Yeah, so we're not too far from the gamma flip level on S&P. The delta, the implied delta right now is about 22 handles between SPX and S&P futures, and the gamma flip on SPX is 60.54. So that would put it on ES to about 60.76. And wouldn't you know it, here's this huge glob of liquidity overhead that's just at that gamma flip level. So I think if we're going to look at an intraday pivot for S&P futures, I would just stick with 60.76. We can see the market thinks it's important too. There's 1,000 contracts sitting overhead there. That's the largest on the book. Part of it is the algo that follows price, but most of this is just the market giving you a sense that options really do weigh heavily on price discovery for the S&P 500. It's, let's see. I think the S&P 500 futures contract trades about 300 billion, 350 billion a day. The SPX options trade about 1.2 trillion in notional. Every day is both notional figures. So the S&P options are about 3 times bigger than the futures flow. So it really is the tail that wags the dog. Doesn't mean that using conventional order flow analysis on futures is invalidated by that. It just means you got to know where the flow is starting. And one area you can gain an edge as a trader is watching the options flow. It's one of the reasons I've built a lot of tools around that. John Gross asks, can we take a look at SLV? Yeah, I'd be happy to look at SLV. That's an area that I am watching with a lot of interest right now. And so we've got SLV here on the TrendSpider chart. And you can see that we're going to zoom out a little bit on this one. So you can see, you know, on the one hand, if you're bearish of this, you could say, oh, look, it's making a head and shoulders. And if this right shoulder comes down, breaks the neckline, you know, we're coming back to the 20s. Valid argument. Okay, that is a valid argument, but it doesn't mean that's the only argument. On a monthly chart, especially when you really zoom out on silver, this looks really bullish. Like, it looks like we put in a multi-decade type of bottom here and are just grinding higher and likely to eventually go back to some of these highs we saw in 2011. I don't know if that all happens this year. I think that has a lot to do with China. China uses about 15% of global silver, so they're a pretty key market. And if they do stimulate in size, I believe that's going to really let out the animal spirits in the silver market. So I love the way the silver chart looks, because to me, this is like a really big rounded bottom. And typically you have much larger moves off those kind of saucer or really big rounded bottoms like we see in silver. So silver to me looks really strong. I just want to continue to see that grind higher. I don't want to see a parabolic move. What you see when you have a move like this, which it's nice to be long during it, but it ends very quickly and unceremoniously and often violently. And so, you know, it's much healthier to see this sort of grind. These are monthly candles. So you imagine with silver, month after month after month after month, seldom interrupted, you had this huge move in 2011 that ended up about $48 an ounce. When you see that kind of parabolic move, you've got to get out of the way as soon as momentum shifts, because it's not going to be generous. Like you could see, as soon as you topped on silver, that next month candle brought you down to the 30s again. And you had that weak attempt to get back up. There was still a lot of excitement, still a lot of dip buying, and it just got sold into it to a new lower low. That's that big picture trend shift. Well, we have that going the other way now, in a much more gradual and methodical kind of accumulation. Now, what's interesting about that is those sort of gradual and methodical accumulations often precede much larger moves. So the key point here being, eventually silver probably does go parabolic. When it does, that's when it's time to be a little bit more cautious about those longs, managing that risk, and especially initiating long positioning. Now let's pull up SLV inside Bookmap here. And we're just going to do a 3-hour backfill. Can we also look at gold? Yeah, absolutely. So James asks, what tools would you recommend to watch options flow? So I'm going to just take a moment to talk my book a little bit. I do have tools that I built for our Discord to watch options flow and positioning, as well as a tool called the SPX Options Visualizer for Bookmap and Motive Wave. So if you're already on Bookmap, you can check out traderaid.com/SPX. And that's where you'll be able to learn more about the SPX Options Visualizer. You can also learn more about our Discord on that website. But suffice it to say, 2025, I'm going to be building out a lot more tools for options flow, for positioning, for inferring what kind of movements we can have. But we already have some really cool ones that let you see the interest levels in just about every optionable security out there, whether it's a stock, an ETF, an index, etc., already on the TraderAid Discord. So if you're interested, you can check it out. You can get a 33% discount on your first term of your plan using the code YEAR3 at checkout. So we got SLV on screen, pretty flat today overall, down about 1%, but you can see just the tape here, pretty flat over the last 20 minutes. Let's zoom out just a little bit. Yeah, pretty flat overall on SLV here. So not a lot to see on this one, but I will go back to the other chart here for just a moment, just to show, again, this huge rounded bottom. To me, this is exactly what you want to see if you're looking for one of those sort of multi-year breakout reversals. And if China comes online with a much more significant amount of stimulus, which I suspect to be the case in their March meeting, and Aisha, my partner and co-founder at Macrovisor, wrote a great article about this. You can go to macrovisor.substack.com, read about it in the weekend edition. So if you want to learn more about what we're thinking for silver this year, check that out. Let's go over to gold. And just what an incredible chart on GLD. And we are looking at a monthly chart. So you remember what I was talking about with that silver chart when you kind of start to go parabolic to be a little cautious? If you folks have followed me for a little while, you'll know that I talked about $2,700 gold happening in September of last year, months and months and months before it happened. I felt very strongly that we would get to those levels. And then as we started to approach them, I said $3,000 gold, the first half of 2025, no brainer. I think we're going to get to 3,000 quite soon. But from there, I'm taking off 2/3 of my longs because I just see too much giddiness. I've been around the gold market, you know, since about 2007, I've been trading it. I'm not a big fan of parabolic moves in anything, especially commodities, because they tend to revert, and they tend to revert violently. Last night, Peter Schiff was having a spaces talking about how $3,000 gold's like the most important price point that's ever happened. I've seen more commercials for buy your gold, you know, sell gold, all that sort of stuff coming back, more of the gold newsletters, more of the gold doomsayers, the dollar's dead, all that sort of stuff. You know, all that kind of stuff going on. So that gets me a little bit concerned. I don't like seeing that. Because the last time I've seen that sort of stuff, it led to a pretty nasty decline in gold. I feel like sentiment is really extended, flows are really extended, positioning's really extended. That's also a sign. So I like gold to 3,000. I don't really like it much after that unless we correct or consolidate. That doesn't mean it can't go higher. It certainly can. I'm not saying that's it. I'm saying for my own purposes, and given how much I've made on this trade and where risk is starting to become bigger and more pronounced than reward, my systematic approach says, let's start taking some off. So I'm going to take 2/3 or my core position off at 3,000. I'm going to keep the runners on. And I also have gold producers. I have juniors and seniors. One of the ones I like a lot in gold is Rio 2. It's on the Toronto as Rio.B, or on the OTCs as Rio FF. It's run by Alex Black. And I think that's a multi-bagger in the gold space. I actually think that's probably one of the best setup juniors. But be careful out there. Do your own due diligence. So, folks, if you're interested in Bookmap, definitely check out TraderAid.com/Bookmap. I'm going to put that in the chat as well, just so you all know. And if you're interested in Trader Aid, we've got a 33% discount going on until Feb 15th for the first 33 that sign up. So there's limited amount left. Use the code YEAR3 at checkout. And that applies to plans. It also applies to one-on-one coaching sessions. So folks on the Bookmap Discord and YouTube, I want to thank you all for tuning in. We're going to switch over. So I'm going to end the stream on Bookmap, but we're going to switch over to Powell's testimony. So on Twitter and on my YouTube, you can stay tuned. We're going to watch Powell's testimony that's coming up in front of the Senate. I think it'll be kind of interesting to watch. I'm not going to say it's going to be fun, but I think it's going to be interesting. So as always, I want to thank everyone for tuning in to this episode of Back to the Futures with me, Markets and Mayhem, every Tuesday at 9 a.m. Eastern. Be sure to tune in. Join us on the Bookmap Discord. Check out what all they have to offer there as well. And stay tuned on my Twitter feed and my YouTube. We're going to be streaming Powell's testimony and Q&A in front of the U.S. Senate.